Shares are the unit of ownership that an investor has in a limited liability company. The ownership of shares confers the rights to what we call the residual value of the company after payments to its creditors. Shareholders therefore typically bear the biggest risk in a company. In case of the failure of a company, they are the last set of claims to be paid. When companies are incorporated, they issue shares to their owners in proportion to the amount of capital that they invest in the companies. This is usually evidenced by what we call a share certificate. In Nigeria, the nominal value of shares is typically 50 kobo each, and these shares are registered with the Corporate Affairs Commission and a register of shares kept by the company secretary, or if it is a publicly traded company, by the registrars. Companies that are publicly traded have their shares listed on a stock exchange, and their share price, the value of the shares, is determined by the market forces and the trading activities that take place on the floor of the stock exchange. Companies can increase their capital by issuing new shares to existing shareholders, a select group of private investors, or to the general public, or by converting some of their profits into additional shares through what we call a bonus issue. Investors in shares usually look forward to two types of returns: capital appreciation, which is a positive return on the growth of the value of the shares, and dividends. Share prices fluctuate from time to time, and they are therefore considered a much riskier investment than keeping your money in the bank. There are different classes of shares: ordinary shares as well as preference shares.